collapse of Silicon Valley Bank. It lends money to some of the biggest names in the tech world and is the largest bank to fail since the 2008 financial crisis. Now, the collapse all happened in just 48 hours. It started late Wednesday when the bank surprised investors, saying it needed to raise more than $2 billion in capital to offset losses from bond sales. So that triggered a panic among the bank's clients, who started rapidly withdrawing money.
You're saying that they suspended the amount of withdrawals to lull people into a false sense of security,
exactly
saying I don't need to panic to pull it out because, hey, they're telling me I can pull it out as often as I like, as frequent as I like, so I shouldn't feel
and as much as I like.
So I'm just going to leave it there because I now have that option.
Exactly. You know, they have a program that they formalized called perception management, and that is managing how you perceive things so you move forward in the manner that they intend you to. But they like distance between their policies and how you receive them so that you don't understand that it's all the central bank policy, because then you might say no, and they don't want you to say no. They want you to volunteer.
Just a second here. No, I don't have your money here. It's in Bill's house and Fred's house.
Hey, what the hell you doing with my money in your house, Fred?
Perception management is a point that you highlighted in one of your recent segments, where you actually played a clip from a recent FIDC meeting where members were quite clearly discussing the bail-in. And we're going to play this clip because they say that retail investors are going to panic if it's highlighted that their deposits could be used for a bail-in, even though it's quite black and white written there. And so they need to manage the perception of retail bankers. We'll take a listen to the clip.
I mean, it's a little bit conflicted, right? I mean, it's important that people understand they can be bailed in, but you don't want a huge run on the institution. But they're going to be. And it could be an early warning signal to the FDIC and the primary regulators when these things happen. And there may be some other prices. This is similar to what Jay was saying in the market, that you can tell whether people understand who's going to be protected, who isn't going to be protected. It would be, I think, an interesting study to look at the evolution of market prices in a situation like March of 2020, for example, and see whether people understood what might happen.
What do you mean the bank is out of money? Insolvent? You only have enough cash for the next 3 customers!
Because I think that you look at the evolution, I think we have to sit down and talk to long-term debt investors and make sure that they, as a stakeholder group, fully understand bank debt today is not what it was before. It is not principal protected by design. And I think that expectation, I like how you started off, Betsy, like it's all about expectation setting. And I think that is absolutely critical. If that doesn't hold, this whole thing doesn't hold.
We're dealing with a society where people are getting their information in tweets. There's just no patience, I think, for going through the elaborate and careful planning that has gone on. It should be there. It should be accessible when people need to know. But I don't think you have much hope of reaching a public that doesn't have a professional need to know.
By Thursday, the company's shares tanked 60%. Shares were halted altogether this morning, and the feds have now seized control of the lender. Now, the 40-year-old bank, it is the nation's 16th largest. It provides funding for almost half of the venture-backed tech and healthcare companies in the United States. So Don Land is live at the bank's Menlo Park branch, where actually customers were, you saw this, lining up today trying to withdraw their money. Did they have any success?
A line of about 50 people deep, waiting in the rain, trying to withdraw their money. They got no money.
And it's that lack of certainty that's keeping many of us awake at night.
I completely agree with that. I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like, my insurance company doesn't tell me what they're doing with my assets. They just assume they're going to pay my claim. Right? I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do. that we want them to have full faith and confidence in the banking system. They know the FDIC insurance is there. They know it works. They put their money in, they're going to get their money out. So there's a select crowd of people that are in the institutional side. And if they want to understand this, they're going to find a way to understand this. There's a bunch of law firms represented in this room. There's a bunch of people that charge them by the hour a lot of money to explain this all to them. And it's fine. I don't have a problem with that. And they all have huge staffs. But I would be careful about the unintended consequences of starting to blast too much of this out in the general public.
Because, ladies and gentlemen, the disruption that they all are moving on is to keep us in a perpetual state of flux. I'm talking about the Illuminists, the globalists. And by the way, I think it was BlackRock just paid $4.7 billion for Ancestry.com. Now, why would they be buying everybody's DNA?
The corporation that people send their DNA to, which is the largest single database of human DNA in the world, is now 75% owned by Blackstone.
And so, for example, we're working with Microsoft and companies like Twist to store IT data in DNA, to say, look, there's no, because today's media will not scale if you think about how much biological data we're going to generate. And so we need, storage media that can scale many, many orders of magnitude more.
It's incredible to me that they are so open in this age of the internet. But yes, I mean, they're laughing at us. No, normal retail clients, they don't need to understand that there's really no money in the FDIC DIF fund, which is the Deposit Insurance Fund, and they should be expected to be bailed in. But if you talk to the normal person, do they even know about the bail-in?
A lot of the tech CEOs who were here trying to get their money out, they did not want to go on camera. They were telling me a lot of their workers still don't know they may not get paid next week. They say $250,000 do not last very long in their world. That's why one CEO was even telling me they may have to scale back or even shut down if they can't get another loan. So Juliet, this collapse here could lead to more layoffs in the tech sector.
Yeah, we hope that doesn't happen. And I know that over the weekend there'll be some maneuvering happening, and we'll see what happens come Monday. I know that over the weekend there'll be some maneuvering happening. We'll see what happens come Monday as well, maybe.
The thing that I'm most concerned about long term is that they're going to use this as a cover story for a central bank digital currency.
Cbdc. If that happens, we're done.